Right, good afternoon, traders. How are we doing today? Welcome to another edition of Saturday Live. We're going to do it briefly today. We're going to start right now from DXY. Of course, we have been on DXY for quite some times now, and our view on DXY has remained the same. For now, long term, it is bullish, but for now, we see it going down. All right, we see it going down. And I will not be surprised if I see this low and this low taken before we resume upside. And of course, corrective structure cannot just go down in a straight line. Okay, it's going to go through some corrections that as it begins to develop, we'll be able to read it very carefully. As you can see, when you are patient and you allow data to gather, you will see your structure clearly. You see, after push down, three-way structure push down. This may not be all the corrective structure we're expecting on DXY. You may have another three-way pullback. Okay, that's 50% of this three-wave down, and then you have another three-wave down. That will be a clear WXY structure going down. From there, you can see a wave, moving to the upside. That's it on DXY. That's the forecast for now. We don't expect anything less. When market resume, I expect DXY to keep going down, all right, before it will correct and then continue to push down. Okay, so you can actually look at the structure of DXY, to know how the majors will play, as market will resume. That's DXY. All right, so let's look at Euro USD, guys. Okay, you can see what I've done on Euro USD. Of course, for quite some times now, we have been saying Euro USD need to pull back. You need to pull back. It has been going down, correction, pulls down. All right, we need another correction before we push down. All right, and if you look at the structure that you are seeing here, it looks like an ending structure. Okay, if you see this as ending structure, then it must come with a what? With a divergence. And you can see the divergence here. This is making a lower low here. This is making a higher low here. This is divergence on a daily. Okay, so with that, we know that daily correction is due. If you spot a divergence in a daily, all right, if you spot a divergence in a daily, what you should be expecting, if you are not expecting a reversal, then that divergence will mean that correction is due. So right now, for 2 weeks now, I've been warning whoever care to listen, do not sell euro dollar, do not sell pound dollar. They are not ready. Okay, for them to fall, they need to push up. And of course, you see the structure that you are having here. It look like it's going to give us a three-wave structure to the downside, another three-wave structure to the upside. I won't be surprised to see another three-wave structure down before we see it resume higher. Okay, so I'll be waiting patiently, guys, to see this structure develop. When market resume, this bullish momentum might still continue to break this top. Okay, to break this top. As soon as it breaks this top, expect it to come down. All right, come pick volume from the low here that will raise it up to the upside to complete the structure. And in that case, you'll be having since this is a 5-wave structure, this one does not look like a 3-wave structure. So if that's the case, I won't be surprised to see that this forms a 5-wave structure to the upside. Okay, it might not be a distinct 5-wave structure. It can be a sharp one like this. So in that case, this correction will now be a zigzag corrective structure, A, B, and C. Then you resume lower for euro dollar. Just as we projected that you are going to resume higher on DXY, you are going to resume lower on euro USD. Let's look at GBP USD. The same thing is applicable to GBP USD. Look at daily time frame Okay, daily time frame, can see that this structure here might just be enough, okay, to take this pair to the downside. Okay, but let's see how it play out. So what I will want you to do when you see a structure like this is called an ending structure, guys. Some people hear me mention ending structure, but they may not know what it means. When you see a push down this way, and you are seeing a slow move, impulse and crawl, begin to crawl. If you are able to spot divergence here, then this move is probable. 80 to 90% probability that the move will come. The same thing is applicable for a buy trade. If you have a push up and at the end you are getting something like this, all right, you are going to have 80 to 90% probability that this is going to fall. I'm going to show you example of this structure when we get to AUD USD. That's the trade that I gave, and exactly at that spot it flows down. This is just the principle. I'm going to show you when we get to AUD USD. So now what I do in this case is I want to find out this is an ending structure. I need to confirm if this is a true ending structure. Do I see a divergence? Yes. This is my divergence. Okay. This is a higher low. All right. And this is lower low. So this is a divergence. So that is why we anticipated that this move is going to come. So people that were selling at this level, we condemn them that it's not right, okay? And that's what you see here. So you want to catch the move? Good. Just go plug it, plug the lower time frame. You want to catch the move. And now look at how the structure is developing. And look at area where you have a break of structure. Pull back, impulse, pull back, impulse, pull back, impulse. Can you see market structure broken here? Where is the market structure that is broken? Here. The resistance here broken. At this stage, you begin to look for what? Correct, pullback, correction. And of course, you see this is a regular flat terminating at 50% retracement. That is your trade to the upside, guys. That is your trade to the upside. Okay, stop loss above below 61.8 or 78% retracement. And then if you want to do it, if you want to catch the next move on GBP USD, all you just need to do for me is to plug a trend. And plug a trend. All right. Now the market, if the trend is to continue, expect the market not to come to below this level again, because it has peaked its order from here to the upside. We don't expect it to come. Every necessary order I needed to peak, it has peaked it here. So what we need to do right now is to look at, in fact, the corrective structure for this move, guys. The corrective structure 1, 2, 3 has already been done. Market peak order at demand, and look at it, move to the upside. But now when market resume, what I expect is that if we are to expect more upside, what I want to see, what I would like to see is simple. Do you notice that this wave here, okay, this wave here, I want to see it as equivalent of this wave here. 1, 2, 3, correction, a push up. Okay, by the time it does this, then this will be 1, 2, 3, correction, 1, 2, 3. Let's get it right, guys. This is how I do it every day. 1, 2, and 3, guys. All right, 1, 2, and 3. Okay, I want to see where I will plug my 3 waves. This is short one. Then you have 1, 2, 3 down. Then you need 1, 2, and 3. Okay, this a complete structure will happen here. Then I will expect that the whole of this move here should be corrected up to 50% retracement. 1, 2, 3. Then you can resume upside from here. This will be a very balanced structure, because if we are expecting a pair to go up, see the way it's doing. Anytime you expect a pair to move up and it's moving up correctively like that, just prepare your mind for the formation of a WXY structure. Okay, and that is exactly what I have sketched for you. This is the first leg of the WXY structure. 1, 2, 3, W, 1, 2, 3, X, 1, 2, and 3, Y. Can you see? This is WXY, and this WXY in itself is W in bracket. And you see 1, 2, 3, retracing it to 50%. We are treating this WXY as if it is an impulse. Okay, then we need to get the correction up to what? 50 to 61.8, and that will be X. All right, I will now need 1, 2, 3 to make Y. And from there, you can make a move to the downside. So chart analysis is scientific. As it's developing, it's making an action, you are seeing a reaction, and you already know what it's about to do. All right, GBP card, guys. GBP card. What we're expecting in GBP card is simple, guys. We are going to see a little correction, let's say in 1 hour time frame. Okay. You have already seen a break of structure here. You have seen your ending structure. Can you see an ending structure here? Plug in divergence. You see that you are seeing a divergence here. Can you see clean divergence, making a higher low, lower low. So because we have seen a divergence, we know that this wave to the upside is going to come. And at a point, we're going to experience a break of market structure. Where do you encounter a break of market structure, guys? This level. Okay. So after break of market structure, you want the market to correct back to appropriate demand zone for you to buy. And where did it happen, guys? Look at it. Simple. 1, 2, 3. And then this is your trade. So since it has already moved out of that place, when market resume, is likely going to cleverly come down to this point of interest. And from here, you can have a move to the upside for GBP card, guys. All right, GJ. Okay, I'm anticipating formation of this structure for GJ. We are still effectively in an uptrend. All right, but we have to be careful with the way we buy at this level, because on a higher time frame, it has actually reached the end of its structure. So I'm trying to foresee a situation where you have a triangle forming here, because right here the trend is still effectively on. You see corrective structure, you see a push up. Okay, after that push up, you see another corrective structure. 1, 2, 3. You see another push up. Okay, after this push up, I'm now trying to look at this as a triangle. Let me show you. I'm trying to see it as a triangle. 1, 2, 3, 4, and 5. If GJ can come to this level, guys, you now notice that this triangle is correcting a certain impulse. Where's the impulse, guys? Look at it here. The impulsive leg here is corrected by this triangle that is to end at 0.618, exactly at this level of the box that I marked. Okay, and once it comes to that level, we're expecting it to make a move to the upside. Where are we targeting for the upside? You go to trend-based fib extension, pick the 2, drop it here, take it back to this level, and then mark a point where you have 100 to 123% fib extension. This level, around 175 level, that's where we expect GBP, JPY, to hit. Is that okay now? Okay, so that is how I see GBP, JPY. GBP AUD, of course, in a higher time frame, we expect this market to pick up liquidity at the equal low and make a move to the upside. I have been saying it since that this market is going to reach, is going to hit 1.82 to 1.84 before it can fall. All right, and right here, because the market made a move. Okay, it came back, it went, it was doing all this. We wanted this equal low to be taken. That is liquidity, guys. If this equal low is taken, it will be very easy for this market to climb to the upside because the required liquidity has been taken. But right now, it has not taken the liquidity. The structure we have seen is 1, 2, and 3. 3 waves up, 1, 2, and 3. three wave down, and this three wave down supposed to break this equal low. All right, that was why when it came here, though I was buying, but I was not convinced because liquidity has not been taken. So I'm expecting it to still come here. Okay, after it comes here, then we either have 1, 2, and 3, or 1, 2, 3, 4, and 5. If it is 1, 2, 3 waves that you have here, then the structure becomes WXY structure. Okay, becomes W, X, and Y structure. If the structure is 5 waves, then you have A, B, C structure. That's essentially the difference, guys. So because we are still expecting it to break the low, to take liquidity, then I'm therefore seeing this structure as an ending structure, because a structure that looks like an ending structure is supposed to come with a divergence. And if you see this as a three-wave structure, one, correction to 50%, and then boom, then to the downside, then this ending structure should come with a divergence. Can we check if it has a divergence? Yes. Higher high here, lower high here. Okay, so this has 80 to 90% probability of dropping. So what I need to do is simple. All right, what I need to do is simple. For people that trade the trend, you see it. You can also check if we have this is another major low, this is another major low. You can check if we have a hidden divergence for this pair. Do we have a hidden divergence? We don't really have a hidden divergence, but that is not a problem. All we have to see to confirm the sell is if we have a breakdown here, any corrective structure back to this level will take the trade to the downside. But this time around, to break this low, okay, to break this equal low. Once this equal low is taken, guys, effectively, we can begin to have a move to the upside that will take all this high again, pick liquidity from the top, and then come down. Is that okay now? That is GBP AUD, USD JPY. Of course, you expect, you know what we are expecting on GBP or USD JPY. Okay, right here, I've said it like 2 or 3 weeks ago that clearly here we are beginning to see a retardation in the trend. The bullish rally is gradually coming to an end because it's developing an ending structure here. You see the way it push up here. Okay, correction. See the push up becoming little by little again. It's not much again. That is to say that the pair is losing steam. And if you look at the indicator, you see that it's making a lower high. Okay, a lower high. And here it's making a higher high. That is the true definition of a divergence. And then when we look at it here, you can see that the structure is broken as it's moving to the upside. Okay, it can make a higher high again. Now it make a lower high. Okay, all you look for is correction, breakdown, correction. We are looking for another correction here, breakdown. Okay, if correction that we get here is up to 50 to 61.8, if it is zigzag, we target 78. At this level, we expect USD JPY to break down. Okay, and when it gets here, you can actually test with a bearish hidden divergence, guys. You can test with a bearish hidden divergence, and when you spot it, it's a further confirmation of a move to the downside. Euro JPY, guys. Okay, Euro JPY, I'm beginning to see that there's possibility of having a structure this way on Euro JPY. Of course, you know, we're expecting Euro USD to move to the upside. So this is a three-wave structure. This is an impulse. This impulse is being corrected by this. This impulse is being corrected by this structure with three-wave structure in the middle. A, 1, 2, 3, B, boom, C. If you get to this level, guys, I need an impulse here, correction. I'm on my way to the upside for Euro JPY. Okay, we have done Euro USD. Okay, all right, leave Euro GBP, USD card. Okay, what I'm looking forward to see in USD card is this. You know, I've shown you this before, that this guy here is look like an impulse, a move up. Okay, you see three wave structure here. Okay, you see A and you see C here. Okay, so if this is A, B, and C, this is a corrective structure. Correcting what? Look at the big A, move down here. Okay, and this is A, B, and C. That is a big B here. And then you have a C here. Can you see a big C here? So this is the impulse. So you can say this impulse is your A prime. A prime. This A, B, C is your B prime. Okay, then where's your C? We expect this C to move up 1, 2, 3, or 1, 2, 3, 4, 5. Anyhow, we want this C to move up here. So if this is our bias, if this is what we have, you know, gotten from there, then all we are looking forward to now is how this will give us an ending structure to the downside. And of course, it's already giving us an ending structure. If you look at this very well, you see that this is an impulse. This is 3 wave down, 3 wave up. We're expecting a 5 wave, or 3 waves down, 1, 2, 3 waves up, then 1, 2, 3, 4, 5. Okay, so if you have these 5, then if you take a fib of this impulse, of course, you know this is not your top, this is your orthodox top. Okay, this is 60, 0.618, you know, percent retracement. That is confirmed. The next thing you want to see is this ending structure. How is it unfolding? Okay, you see the way it's developing. You see the way it's developing. At a point, you want to move up. After the structure is broken, let it correct to 5061.8. Take the trade to the upside. You know, where are you supposed to target, guys? You now target 100% fib extension of this leg 1, 2, and 3. All right, just target anywhere around this level. At the end of the day, this wave here is going to be equal to this wave here. Simple. And then from there, we may see USD card push down to the downside. NZD USD, the same thing with euro dollar. We expect whatever happens, if you see you have a move to the upside, wait until you see a correction, you know, until you see a correction to 50% retracement. Can you see 1, 2, and 3? Oh, sorry. 1, 2, and 3. After this, look for retracement back to 50 before you take a move to the upside. You know, when you are looking at the market this way, you are indirectly looking at 3-wave structure in the place of an impulse. You know, I told you there are 3 types of impulses: a mono wave, a 3-wave impulse, and a 5-wave impulse. Okay, so when you see me taking a fib of a 3-wave impulse back to 50 to 61.8, it is because I'm treating these 3 waves not as a corrective structure, but as an impulse. Is that okay now? That is for NZD USD. Then AUD USD. AUD USD, guys. AUD USD. I want to show you that drop I was telling you. Okay, but that drop is not ready, but we got it. Okay, we are seeing an ending structure here. So we had anticipated that this was going to flush down. Okay, but why was there a change of structure? I'm going to tell you, because we saw divergence here. There's divergence here, and we call this trade right from the top here, about 50 or 60 pips or so. All right, but right now there's a change of change of bias concerning AUD USD, and the reason why I have a change of bias is that in as much as DXY is coming down, this pair is not going to find it easy to also come down. So what we are expecting is that if this can break the top here, we want a corrective structure like this, and then a push up again. All right, so I'm not going to be selling any of the majors for now. Okay, so that is AUD USD, guys. US 100, You know, I've been following this pair right from here. I caught it here. I caught this one when this one made 50% retracement. I was waiting for 61.8. It made 50% retracement. As soon as I saw a engulfing candlestick pattern here, I caught it here, closed my trade here. Okay, when market was about to close, I knew no liquidity for sale. It has to carry on with the volume for the buy. So this corrective structure again, I took this, all right, for just $1,000 or so. So that's how this thing works, guys. So all you need to do now is that as long as you are expecting AUD USD to be bullish, don't expect to sell any of the indices right now. So what we are expecting, if we see a bigger corrective structure here, we take a buy to the upside. And if you plug your trend line, see it this way, So what's most probable is for this to go through what is called mean reversion by coming back to its main level. Come back to this area, we'll take a trade again, just like this one coming back to the main, 50%, we took the trade. Come back to the main, we take the trade. Come back to the main, we take the trade. That is the idea behind trend line trading. Allow the market to come back to its main value and then you take the trade. All right. So have I looked at oil? No. So oil, what we're expecting in oil is a sell. Okay, you know, I give this markup after seeing this running flat here. This one will come here. So we should expect equal legs between A and B. And when I plug in my trend-based fib extension, drop this here, drop this guy here, I pinpointed exactly this level that oil is going to drop at about 100 to 103. All right. I didn't set sell limit, but I watched the market. As soon as I saw that it was dropping, I pulled the trigger from this level to this level. At least I got some pip before market close. So what's our expectation now? If we are to sell oil, our expectation is simple, guys. Market may open this impulse, let it be valid, and then let it correct to the appropriate fib level, and you take your trade to the downside. We're expecting a downside in oil. Then gold. All right, gold. For now, even though gold is buying, I do not want to give that buy respect. Of course, you know, I combine three methods of trading to form my trading system: Elliott wave theory, demand and supply, and liquidity. Okay, so here, this is liquidity. So if Elliott wave theory tells me that this is 3 waves down, let me show you clearly, guys. Let me show you clearly. Okay, you have corrective structure here. I'm going to show you clearly, guys. You have corrective structure here. 1, 1, 2, 3, and another 1. This is 3-wave structure to the downside. You have 1, 1, 2, 3, then 1, 1, 2, 3, boom. This is 3-wave structure to the upside. Then, even though we have 1, 2, 3, 4, 5, this is 5-wave structure to the downside. But what happened to this liquidity? If this pair is going to make a move to the upside after completing impulse 1, 2, 3, if it's going to make a move to the upside, it must clear this liquidity for me. And as of now, it has not cleared that liquidity. We have equal low, 3 equal lows here. Okay, so what I'm anticipating that we may likely see is that this 1, 2, 3, 4, 5 will form 1, 1, 2, 3, and 1. 3-wave structure in the middle, then 1, 2, 3, 4, 5. This is what I'm anticipating for gold. And by the time you make this move, guys, you know, this low will have been effectively taken. And once this low is taken, guys, just get ready for a massive buy of gold to the upside. Okay, it's not going to stop at this low. It's going to break the top to the upside. I don't know what will happen, guys, but this is what I see structurally. And of course, most of the time, 9 out of 10 times when I see a structure, it play out. So be careful buying gold for now. You know, it's just going through corrective phase. And as soon as about 50 to 61.8% of the previous move is complete from this level to this level, you have to be careful of how you trade gold to the upside. Anywhere here, they're expecting gold to come down to take this low. All right, so that's it about gold. Then I don't know if we have like I have these are essentially the setup I have. Maybe NZD, AUD, NZD. I also have a setup on it. In fact, I have a current trade running on it. And what did we see for us to look for a sell opportunity? All right, on the daily time frame, of course, you know I trade the daily. Okay, you see there's clear divergence here. So this divergence means two things. It is either this market will go through reversal or it will go through correction. And so whether it is correction or reversal, if we look for sell opportunity, we are going to make money. That's what it means. So based on this, I have to look for the wave structure, the exact wave structure, corrective structure that is developing on its way to the upside. You know, this is the beginning of the correction. 1, 2, 3. These 3 waves down. Then these 3 waves up. It's now giving us a complex correction. 1, 2, 3. Okay, it's giving us a complex correction, guys. Can you see? I want to tell you how I pinpointed the exact spot, okay, that this pair was to come down. 3 waves up, okay, 3 waves down, which is 1, 1, A, B, and C. And then we have 3 waves up again with a running flat in the middle, exactly here. So how did we catch the trade from the top, guys? It's just to take a trend-based fib extension, pick this 3 wave up, take it down, target where between 100 to 123% fib extension, this level, guys. Okay, so the market broke that level a little, but as soon as this bearish engulfing appear, guys, this bearish is it bearish engulfing you call it? This one. See candlestick that matter? Boom. As soon as this one form, I put the trigger exactly at 1.1165, guys. This was my entry point, 1165. Okay, in my signal channel. This was where we pull the trigger. Lest I forget, if you are interested in signal channel, you want to trade my signal at a at a spot on entry, just contact at Fati on Telegram at Fati. Okay, let me write it for you. Fati. Am I right? Am I right like this? I think so. Okay, contact at Fati. Let me confirm. Fati. Let me confirm the name. Okay, Fati. Yes, it's right, guys. It's right. Correct. Just contact her and get the details. You know, that's how we do it, guys. A pinpointed entry, you know. And right now, we close our first position at this level, and then we had this corrective structure. We're in the second position running. So what we intend to do, guys, is we'll be taking it bit by bit, guys. We'll be taking it bit by bit. What do I mean by bit by bit? Yes, this is definitely going to push down. We are going to have another correction. We will push down. We'll have another correction. We will push down. So we have developed a trading system that tells us where correction will start from. All right. You see this area? You see when this market bought from here, you see how it moved. So are you telling me this is not a strong demand area? It is a strong demand area. So when market gets to this place, there will be a reaction. And the reaction is going to come in form of corrective structure. Okay, we take our profit here. When it's done, we get a good supply area here we enter again, push down. What is this guy? This is another demand area. This market will push here. We take our profit again. It makes a corrective structure. We sell it again. All right, we sell it again. This is how we are going to take this pair to the downside until we achieve these 3 waves down, 3 waves up here, and 3 waves down here. Okay, so if it is corrective structure we are trading, then from here it will make a move to the upside. Okay, how are we going to know that this is a move to the downside or this is a corrective structure? That particular trick is being taught only in my mentorship program. Guys, only in my mentorship program. You want to know if you see a 3-wave structure, this wave, you see a 3-wave structure down, you see a 3-wave structure up, you see another 3-wave structure down. How are you going to know if this should be a continuation to the upside or a pullback and a further move to the downside? How are you going to know? It's a simple but tricky one. Okay, but I teach it very effectively in my mentorship program. So if you want to join my mentorship program, you are very free. You want to know how to spot on your analysis. You want to take your analysis to the next level. You know, you want to understand the market structure the best way you can, and you get to anywhere in the world, and you can stand and defend the market. You want to understand fundamental analysis like a pro. You want to stand and break down the market like a pro. Come to me. I will tell you the secret. All you see me do, all you see me that wow you in the free content on YouTube, when I see people, I laugh. It's just 20-30% of what I have in store. The remaining 70% is reserved for the mentorship. And coincidentally or incidentally, people, the one that wow them, that is free on the YouTube, they learn it and they are profitable. They are professional, highly professional, profitable traders today. They have not even gone advanced. They have not, they are just scratching the surface and they are already professionals. So these things is not difficult, guys. This stuff is not difficult at all. Chart analysis is the easiest thing you can think of. The easiest thing you can think of. Okay, where the issue is the psychology. And once you are able to work with your psychology, you're on your way to success. It's as simple as that. Okay, let me just show you. Let me share with you briefly. Let me share with you briefly. You see my FS book. I'll be showing you this as time goes on, so that you know that we don't play here. Okay, can you see this is just a day of trade. Okay, I decided to open this account and connect it with my FS book, and you see how far I go on the account. Just to be transparent with you guys, this is a deposit of 100K 19 hours ago. This is already a profit of 6% return on investment. I've not seen a business where you can start and make 6% return in investment within few hours. Remember, market close since when? Since yesterday evening. Okay, so this account was not traded more than 4 hours, and with a gain of 6% return on investment. This is incredible, guys. You can't achieve this feat by not getting the knowledge. So adequate knowledge, adequate education will get you there. So I wonder why people, the money they are supposed to use to, educate themselves, improve themselves, they blow it. And after they have blown it, they now come and say, how do I now get it? They now look for another money for their education. You don't make the mistake some of us made from the beginning. I don't want anybody to make it. Instead of you to go and blow your money, use it to equip yourself first. And then when the knowledge comes, you will make that money back. Is that okay now? So that's it for today, guys. I've told you it's going to be brief. It's going to be short. We'll continue again in our trading community on Monday. I think for those that belongs to the trading community. I gave you like 2 or 3 trades last week, and I think they all make sense. They all made money. GBP CHF sell, AUD USD sell, and then I think one other trade which makes sense. I think let's look at BTC before we go, guys. Just have 1 minute before we go. Let's look at BTC. BTC. Okay. BTC USD. Okay, BTC USD. I'm not going to get involved in BTC USD this weekend. The reason is simple, guys. I wanted to trade BTC USD, but I need a correction. I need a correction at least to this level before I will buy to the upside. I'm still going to buy to the upside because the structure I am trying to look at is a simple 3-wave structure with this wave in the middle. Okay, with this wave in the middle. All right, you have this move up, correction, another move up, and this particular move up, guys, I'm looking at it will be like 5-wave structure: 1, 2, 3, 4, and 5. Okay, so because this is not it, I cannot treat this as a 3-wave structure. So I'm treating this as an impulse, guys. So if this is an impulse, this must be impulse because there is no structure like 5, 3, 3. No, we can have 3, 3, 5. But since I'm treating this as a 5-wave to the upside, single mono wave. Okay, so therefore this should be 5, 3, 5, which is a zigzag, and a zigzag should get to about what percentage now? About 78% fib retracement. Okay, where is 78% fib retracement? Let's get it here. So this impulse 78. Okay, so I'm expecting Bitcoin to hit this level, boom, before any reaction, because that is what this fib extension gives to me, and which is fib retracement. And this is what? This is 78. This is zigzag that should come to 78. So I expect Bitcoin to hit 28 and then move down again to the downside. Okay, so that's my bias. But this weekend, I'm not going to get involved because I have seen that there may not be a correction to get to my level. And if there's no correction to get to my level, why do I need to get involved? Okay, there's no correction to get to my level. So because there's no correction to get to my level, I'm not going to get involved in BTC. All right. So if you are buying at this level, guys, you are gambling. Okay, you are gambling at this level. You cannot buy. There's no buy setup. Okay, and you cannot also sell at this level, because what informed your decision to sell here? Does it mean you are so sure that it will start selling here? No, nobody knows where it's going to sell. It can come here, it can come here, it can come here and start selling. So you are not, this is still an uptrend. You are not looking for a sell. You are looking for a buy. And a buy will not be valid except it comes to a strong demand level. Where is the demand level in this move to the upside? Where is the demand level? This is the only spot on demand level. You can see that at this this price level, this area and this area, there is no supply, there is no sell at all. It was all demand. That is why when the market comes to this level, you are very correct to take it to the upside. This is where your setup is. Your setup is not here. Whether buy, whether sell, it is not there. Do you understand? Look at it here. After making, what does it do? Come back to this area. Strong move here. You see it? Look at it here. Look at it here. Look at this correction. Where does it come? Strong move. Strong move. Boom. If it's coming, where does it come? Strong move. Boom. It is not difficult, guys. Go and backtest. Go and check it. Market will only react where you have a strong move. If you don't have strong move, it's not going to react there. Look at the corrective structure. Look at it. Strong move, market comes down. Look at corrective structure. Strong move, market come down. You see? So if you don't have strong move, guys, market is not going to react. Okay, what is the essence of that small move, strong move? That is the demand and supply that we talk about. Look at here. Look at here. Even though market was about to what? To come down, look at it. It reacted at demand. Strong move. It has to go up until that strong area is taken. Before we see that, oh, market structure is taken, we have to begin to now look for what? A sell opportunity to the downside. So it's as simple as that, guy. Should I show you more before we go? Yes. Look at it. Look at it. Look at it. You see the strong move I'm telling you here? Strong move. Market will correct. A strong move, market takes off. Can you see? Strong move. What does the market do? Correct to that place. What does it do? It takes off. So these are things you must be taking note of when you are doing your analysis. Okay, take note of them when you are doing your analysis. Look at it. Look at corrective structure. Strong move, market take off. Okay, look at corrective structure. Strong move, market take off. All you just need to do is to understand the structure, know where the market is going, determine those strong move areas, and then get your entry in line with that. It's as simple as that. Look at it. Corrective structure, back to what? Strong move. And the market comes down. Do you get now? It's as simple as that, guys. It's not difficult. Do you understand now? So I'm going to round it off here. We meet in our trading community on Monday. So if you have not joined our Telegram channel, check the description below. You'll see the channel link there. You can join. There you see free content every day. All right. You want to join Signal channel? You check the description. You see Faithie address. You can contact us. We'll tell you what to do. You are already on YouTube. For you to be hearing me, it means that you already have our YouTube address. Then you can learn there. We are making that channel a household. You know, I don't know how to qualify it. Whatever you are looking for, as far as financial market is concerned, you get it here. And you don't need to be running around, because in as much as you can learn the system and you are profitable with it, you are okay with it. So see you next time, guys. Bye.
Yeah, thank